Debt replacement rules in a 1031 exchange and how loan to value can be so important. So when doing a 1031 exchange, when you sell a property, and let's say you retired a mortgage when you sold your relinquished property, you're going to have a certain amount of what they call loan to value. How much was the loan in terms of the total sale price, okay? When looking at and when purchasing products to replace your real estate, you need to keep your eye on the prize, because the IRS basically states that if I sell for $1 million, regardless of the size of my mortgage, I have to buy $1 million. So a lot of times people think that, let's say I have a $500,000 mortgage, right? And I go out and now I have $500,000 sitting with the QI, but I use $250,000 as a deposit, and then I get a mortgage for $750,000. Now I bought $1 million, but I didn't use up all the equity. So even though I equaled the same amount of real estate, I did not follow one of the other rules of basically using up all the equity sitting with the QI. So you have problems on both sides. You need to use up all the equity and replace all the debt, either with another mortgage or with a replacement of cash. So in another scenario, let's say in this $1 million example where I have $500,000, a lot of investors get themselves into trouble because they go ahead and do an all-cash deal for $500,000. Now, they used up all the cash, but they didn't replace the debt. And now they're going to have a tax on the $500,000 that they didn't replace. So when we're helping clients out, whether it's a one-property replacement purchase or multiple properties, we are adding up all the equity used and all the debt that's been put in place to meet the IRS guidelines of equal or greater. And it's kind of funny, but it's not just equal or greater. Equal meaning total real estate, but a reminder, you have to spend all the equity that's with the QI. So when we're helping our clients out, the DSTs make a great option and an additional tool in case that person finds an all-cash deal. Well, we've got products with higher LTV, let's say 85 or 86%, so they can put a minimal amount of equity towards replacing the debt and focusing their cash on their all-cash purchase. But when we add the two together, we're matching the LTV target of the 1031 exchange. So if you like this video, make sure you hit like and subscribe, and have a great day, and make sure you watch our other videos as well.